Attorney General Letitia James has recently been indicted for bank fraud. And although I don't want to go over everything in the indictment, I think it is valuable for us to talk about how exactly you can buy a house. There are three primary ways. And as an educator for real estate and first time home buyers, I want to go over this so you're well aware of how this all works and why they are even charging her with bank fraud. So, the three ways you can own a house typically are one, as an owner occupant, number two, as a second home or a vacation home. I'm going to use those two things together because a lot of second homes thought of as vacation homes. And third is as an investment property. And there are pros and cons to buying it one of those three ways. All right. And they're alleging that basically that she used her second home as more of an investment property. That's what they're alleging. So let's talk about the first way. This is the most common way. This is how most first-time home buyers are going to buy their houses. And I didn't do this, but I'm Shaheedah Hill, getting you over the hill to home ownership and helping you confidently buy your first home. The first way is as an owner occupant. Now, this way carries the least amount of risk for the lender. As a benefit, it's going to have a lower down payment and lower interest rate. And usually it's going to be much easier to qualify for an owner occupant property than it is for a second home or an investment property. So this is the primary way that people buy homes. And the reason why it's the least amount of risk to the lender is because when somebody is going to live in the property that they're taking a mortgage out on, that's usually the last property they're going to stop making payments on versus a second home or an investment property. When people are going to stop making payments or they're having financial difficulties, they'll usually stop the investment property first, then a second home, but their primary residence that they're owner occupying, they're going to try for the most part, because that's where they live, that's where their family lives, to make those payments. And that's why you have those benefits. Now, for the second way to buy a property, it would be a second home or an investment property. Now, this one's in the middle. Now, although there's going to be a higher down payment than owner occupancy, it's still not as much as an investment property. And the interest rate is going to be higher than a owner occupant purchase, but not as high as an investment property. And then the qualifications, that credit score, how much cash you have to have on reserves, that's going to be right there in the middle too. But for a second home or a vacation home, the lender is expecting you to spend some of your time in that property. You cannot just rent it out all 12 months. You do have an opportunity to rent it out or maybe put it on Airbnb based on the terms of that mortgage, but the agreement that you're typically making with the lender when you get this loan is that you will occupy this property at least at some point of the year. Otherwise, then it needs to be an investment property. If you're not going to occupy it, you're going to rent it out. You're going to, rent it out all 12 months or try to rent it out all 12 months. You're going to put it on Airbnb. You're going to buy a fixer-upper and flip it. Then that's considered an investment property. And with investment properties, you don't have to live there, but that carries more risk to that lender. And to mitigate some of that risk, they're going to require a higher down payment. They're going to require a higher interest rate. And they're going to require usually that you have a higher credit score and that you have more money in reserves. They may want to see more of that investment property monthly payment in the bank before they approve you. And this is just an example, but the second home down payment might be 10%, where an investment property down payment might be 20%. So it is much easier for somebody to buy a second home or a vacation home typically than an investment property. And so that's where the bank fraud charges are being looked at. Now, a lot of people always ask me, well, how do they know if you're going to own or occupy this property? Usually for owner occupants, they know that you're going to own or occupy is because you don't have, any other properties usually. and wherever your employment is very close to the property that you're buying. You, for owner occupants, you can turn a property that you originally purchased as an owner occupant to an investment property as long as you live there for at least 1 year. So that's why a lot of people, to buy at that lower cost, will buy an owner occupant property, 1 unit to 4 units, and then after a year, they'll turn that property into an investment property. Now, and that's a way that some people get into investment property for the first time at a lower cost. But the how do they know answer is, every once in a while, I've only had this happen one time in the time that I've been doing real estate, but every once in a while, there'll be audits on, different lenders, and they'll really check that paperwork. I remember having a client under contract, and her closing was delayed, and the lender said, "Hey, we had an audit and we can't do any closings until the audit is complete." And I'm assuming it was some kind of government audit to make sure they were doing things correctly. So that's one way. Sometimes it is electronic. I've heard before that when the underwriter, this before you close, was doing some of the work, like doing some of the research, they saw that the buyer, instead of getting an owner occupant home insurance, he got like a landlord home insurance. And that was a red flag. But after a closing, a lot of things are digital now. It could be that you changed your address, like your mailing address. It's different things that might, come up. But I would say overall, I don't hear a lot of people being charged with mortgage fraud for these reasons, unless somebody's really looking into it or somebody's giving somebody a tip, or by chance the company has been audited and they're going to check. And the federal government may do just random audits, random checks on, government loans in general. Okay. So, or just loans in general. They may do some checks on that. Now, so I hope this is helpful to you. I know most of the people that watch my channel are going to likely be owner occupants, but as you grow in real estate, you probably are going to at some point maybe get a second home or maybe get an investment property. And I would say for the second home, just read the guidelines for what you are applying for, because you can. I have, friends that have beach properties and they're renting them out at some point during the year, but they don't do it all year long. So just be mindful of that. Know what you're getting into. I think the chances of you being audited are low, but you always want to do things on the up and up because you never know what can happen. If you have any questions, please ask me in the comments. I'm Shaheedah Hill, getting you over the hill to home ownership so you can confidently buy your first home.